Hey, I'm Darius Clark of I-75 CPA Review, and candidates ask me all the time, which exam should I take, first, second? Well, here we are in 2025. President Trump has been inaugurated, and the Republicans have the Congress and the Senate. What does that mean for the CPA exam? Well, for the reg exam, it means we're probably going to get some new tax laws, and those new laws are going to go into effect on the exam in 2026. So I would advise you to get reg out of the way in 2025, the first half of the year if possible. Why the first half? Because if you don't start studying for reg, let's say until July or August of 2025, and then you take reg in October, November of 2025, if you don't pass reg the first time, then you might bump into the new tax laws and all the changes if you have to take reg in January or February of 2026. And that means after having learned all the old rules, you're going to have to forget all that and learn the new stuff. So that's why I suggest go to i75cpareview.com and get yourself on the right road. Get on I-75 with me, Darius Clark, because the right teacher makes all the difference. I'll leave a link in the description. All right, let's look at the flow of a 1040, because the exam's going to expect you to know how an individual tax return and its forms and schedules come back to page 1 of the 1040. Now, you won't have to memorize line numbers because they change every year, but you will have to know the flow of an individual tax return. And of course, the names and the Social Security numbers are all fictitious for Phil and Shelley Strickland and their 4 kids. We can see that they're married, filing jointly. And what that's going to mean is that even though Phil is an employee and Shelley is self-employed, they're going to put all their income on one return. And while you won't have to memorize that wages are on line 1 of 1040, you will have to know where wages comes from, because the exam will expect you to know the supporting schedules that impact the 1040, and the W-2 form is a big supporting schedule that a lot of taxpayers receive. And here would be that W-2 form. And you would have to know what flows over from this W-2 to the 1040 and what does not. Not only the $80,000 of wages on line 1 would go to the 1040, but what else? What about some of these other buckets like line 2, federal income tax withheld, or Social Security tax withheld, or Medicare tax withheld? How does that impact the 1040, or does it? What about state income tax and local income tax withheld on a W-2? Where do these items belong on a 1040? Well, maybe some of these don't transfer over at all, because maybe some of these aren't relevant to the 1040. So let's start with this W-2 form, and we can see that the gross wages on line 1 of $80,000 comes right over to the 1040, page 1. While Phil Strickland received a W-2 form from his employer and received $80,000 of gross pay, Shelley Strickland is not an employee. She's self-employed, so she doesn't get a W-2. How does she report her income? A self-employed taxpayer fills out a Schedule C and attaches it to 1040. Let's take a look at Schedule C of 1040. And right here on Schedule C, Shelley Strickland is a personal trainer and earned $140,000 of gross income. But the great thing about being self-employed is you get to take all these deductions first before you pay your tax on the net profit from Schedule C. So what started out as $140,000 of gross income, by the time she gets around reporting the actual amount that she has to pay the tax on, it's down to $72,720. Big difference between how a self-employed taxpayer like Shelley reports her income versus her husband Phil, who's an employee taxpayer who gets a W-2 and has to pick up all the gross wages as income. And as an employee on a W-2, there's no place to report any deductions, but on a Schedule C there is. Look at all of what can be expensed for business before we have to report what's taxable. As a self-employed taxpayer, if you have any of these deductions, you can take them. But what about an employee? There is no place for an employee to deduct any of these business-related expenses. The best you can hope for is that you get reimbursed from your employer. Now, we said earlier that you have to know the flow of a 1040. So how does this profit of $72,720 on Schedule C flow back to 1040? Does it go directly back to the front page of the individual tax return? Or does this $72,720 have to make a stop on some other schedule first? And the answer is you have to stop on Schedule 1 of 1040. You don't have to know that it's line 3 of Schedule 1, but you can see where it says business income or loss attached Schedule C, and there's the $72,720. Notice that's the net profit, not the gross. And here on Schedule 1, it gets combined with some other items before it goes back to page 1 of 1040. What other items flow to Schedule 1 before they get reported back on page 1 of 1040? Well, you can see on line 5 here, rental real estate. So if they have a rental property, that would get reported here. And it looks like they do because there's $1,228 of net profit from a rental. If they didn't have rental property, but maybe they were a partner in a partnership or a stockholder of an S corporation and they received a K1 form, that would be reported here on line 5 of Schedule 1. Now remember, you don't have to memorize line numbers, but you will have to know what gets reported on Schedule 1. On line 7, if there was any unemployment compensation, that would be included on Schedule 1. Line 8B, if there's gambling winnings or any cancellation of debt from a credit card company, that would be reported on Schedule 1 as income. Whatever jury duty pay was taxable on line H here, or prizes and awards given, all that would combine and you'd get a total on the bottom of Schedule 1. You see the $73,948? Well, that would come back to page 1 of 1040. And now we're back on page 1 of 1040, and you can see the $73,948 where it says additional income from Schedule 1, line 10. And the whole key here is to understand how these forms and schedules flow back to page 1 of 1040. And you can see on page 1 of 1040, there's just not a lot of room for details. And that's why we need these extra forms like Schedule 1. Page 1 will tell you that they had additional income of $73,948, but if you want to see where that income comes from, you'd have to go to Schedule 1 to see the specifics. And on the exam, they're likely to give you a document review sim, where they provide you information behind a bunch of different exhibits. And one of the exhibits will have a W-2 form, and another exhibit will have a Schedule C, and information that pertains to that Schedule C. And then a different exhibit might have Schedule 1, and you'll have to know that gross wages on W-2 form go directly to page 1 of 1040, but that Schedule C, not the gross, but the net profit, makes a stop on Schedule 1 before it comes back to 1040, page 1. So page 1 of 1040, what kind of information can be gained? Well, one thing we can see is that on line 9, their total income is $169,625, and most of that consists of Phil's W-2 for $80,000 and Shelley's profit on the Schedule C. And then there's some other items. They had some interest income, some dividend income. They even took $10,000 out of their IRA. That's taxable. And they had a capital gain. Maybe they sold a stock for $1,408 profit. So their total income is $169,625. Another term for that is gross income. But this will be a good time to point out that their total income, their gross income, is not the same as their adjusted gross income. Very different. You can see their AGI, their adjusted gross incomes on line 11, that's $133,287. So their gross income, $169, but their AGI, $133. So how did gross income become AGI? What's that $36,000 difference? If you just look at line 10, it says adjustments to income, but it tells you where to go for more details. Schedule 1, line 26. So let's go back to Schedule 1 and see where this $36,338 comes in, how we got from gross income down to AGI. So while Schedule 1, Part 1 shows the details of additional income, there's also Schedule 1, Part 2. And here are some of those items that are deductible from gross income to arrive at AGI. And you can see the total down here, $36,338. And one of those items is the self-employed health insurance deduction of $17,200. And we'll look at these in detail when we see the deductions to arrive at AGI in a different video. For now, I just want you to see that there's not a lot of detail on page 1 of 1040, but if you want more information, you got to know where to look. What else is on Schedule 1, Part 2, deduction to arrive at AGI? Any alimony paid would be there. An IRA deduction. A deduction for a health savings account. A self-employed IRA deduction known as a SEP or a simple. Any student loan interest paid would be deductible here. But for the purpose of this video, we take the total of what's on Schedule 1, Part 2, and where does it go? It goes back to page 1 of 1040, because this is going to be the difference between gross income and AGI. And now we're back on page 1 of 1040, and you can see on line 10 where it says adjustments to income from Schedule 1, line 26. There's that $36,338, and it's a subtraction from the $169,000 to get down to the AGI of $133,287. And now you know that gross income, which is $169,000 on line 9, is not the same as AGI on line 11, which is $133,000, and the reason is you're allowed to deduct certain things to arrive at AGI. And where are those that can be deducted to arrive at AGI? You find them on Schedule 1, Part 2. So the purpose of this video, the flow of a 1040. The fact that total income, gross income on line 9, $169,625, not the same as AGI on line 11, $133,287. And then, what about this last line down here, line 15? This says taxable income, $93,765. Notice AGI and taxable income, very different. Why? Well, AGI on line 11, $133,000, is a very important subtotal. But we don't pay taxes on AGI. We pay taxes on taxable income. So think of a taxpayer's AGI as the first stop on the way from gross income to taxable income. And what's the reason why the AGI is much higher than the taxable income? The answer is allowable deductions. If you look at line 12, it says standard deduction or itemized deductions from Schedule A. So once we get to AGI, which is line 11, the $133,000, taxpayers can then choose the greater of the standard deduction, which changes every year, versus the itemized deduction, which depends on the individual's tax situation. And that's why total income on line 9 will almost always be higher than AGI on line 11, and then AGI on line 11 will always be higher than taxable income on line 15. All right, let's try this question. Which of the following does not appear on Schedule 1 of Form 1040? A says profit and loss from business, B, rental income or loss, C, cancellation of debt, or D, wages, W-2 income. And the answer is D, wages. Wages from a W-2 does not appear on Schedule 1. Instead, it's a direct entry on Form 1040, page 1. The other items, profit and loss from business, rental income or loss, cancellation of debt, these appear on Schedule 1, Part 1 if the taxpayer has any of these, and they get added together with only the total then showing up on page 1 of 1040. And this question asks, which of the following does not appear on Schedule 1 of Form 1040? And the answer is wages, W-2 income. How about this one? Which of the following is correct regarding Form 1040? A says employees are taxed on their gross. And if you think you know, leave me the answer in the comments section.
Hey, it's Darius. Scores are out, and congratulations to those who passed the CPA exam, and thanks for noticing the I-75 difference. So if you didn't pass, don't get mad. Get yourself on I-75 with me, Darius Clark, because the right teacher makes all the difference.